that you're able to kind of make money instead of that money just sitting there.
Welcome to Building Wealth Through Real Estate. If you invest or desire to invest in real estate, then this show is exactly what you need. And here's why. We all know that the number one thing that you should be doing as an investor is networking. Your network equals your net worth. But how can you use this to your advantage? Well, firstly, take notes. Listen to what the guests have to say. If you're a new investor, you can learn from the mistakes that they've made, the experiences that they've gone through, and learn how they think. If you're an experienced investor, you could see strategies that they may be implementing that you haven't thought of using yourself. Now, secondly, you may have questions, and if you do, great. Put them in the comment section down below, and this way we can be sure to get those questions answered for you. And thirdly, there's a ton of information out there, but I found that most of it is relevant to the US, and it's hard to try and take out and extract and see what's relevant to your area. So all of the guests that I'll be interviewing are Canadian investors. So if you invest in Canada, if you're interested in investing in Canada, then this show is exactly what you need. Joining us today is Chris and Roxanne. Chris, Roxanne, could you tell our listeners a little bit about yourselves and where your real estate business is currently at?
I'm Roxanne Endrinal.
I'm Chris Endrinal.
We've been married for 13 years, been together for 3 now. We have 3 children and a little bit about ourselves. So I work full time and I'm an insurance agent. Chris works.
I work at a company. I've been there for about 20 years now, and I just went part-time in May. So far, I've been just looking for those flexible hours to focus more on real estate investing.
Yeah, so we've been investing for about 12 years, I'd say, but really focused in about fall last year. But yeah, we currently have 4 properties. That's kind of our portfolio right now.
That's impressive, guys. Can I just ask, if you guys don't mind, how old were you guys when you got married? Because you guys both look super young. To be married for 16, to be together for 16 years, married for 13, wow. How old are you guys, if you don't mind me asking?
You're so sweet.
I'm 37.
I'll be 37 on, it's almost my birthday.
What?
So.
No way. Really?
Yeah.
Yeah.
Okay, wow. Honestly, I wouldn't have said. I don't know if that's allowed. I know you're never supposed to ask a lady her age though. Quick question. You guys have 4 properties. Those are 4 rental properties that in your portfolio right now, hey?
Yes.
So we have our primary residence, which has a secondary suite. We have 1 rental. We have 1 split in the making, and then the other one we just bought, and we're building a secondary suite in there.
Okay, so let's backtrack a little to how you guys got started in real estate and your journey to this point.
So it all started with renting, actually. Actually, before that, we were living with my parents, and then we lived with her sister. And then shortly after we got married, we started renting for about 8 months, an apartment. That was really nice. So it was just really like one payment that we had to worry about, right? With that one, this is like an all-in-one payment. So it was nice and easy, right? Then we decided, no, we should look into like a starter home. And then that first starter home is where it first started. So
Yeah. So we bought that property. We got married in 2009. 2010, we bought our first property. It was an infill, so it was nice, kind of like a newer house type of feel, but in an older community, I guess. So, so that one we were in for a few years. We did a bit of renovations there. Built a second bathroom. Kind of had that experience with renovating, I guess. We built a second bathroom in the basement, and then kind of did some other stuff within the kitchen there. But basically, we ended up moving to Calgary in 2013. From there, we got a friend to manage a property in Winnipeg, and then we still kind of kept that for a little bit. When we first moved out here, we lived with my dad for a little bit, but then we ended up going, no, we're gonna buy a house again. So we ended up buying a spec home actually. So again, a newer home, which was nice. Um, we lived there again for a few years, and then we ended up building another property. Um, so kind of just
So
got into buying real estate, kind of the newer type of property. That's what we've been used to. Um,
yeah, two brand new builds.
Two brand new builds. So this was
So
our first year in June when we purchased kind of like an older home, which wasn't that old. It was like a 1980s home.
mhm,
But it's definitely a different experience. Learning a lot on this property.
Yeah.
That's actually the property we're in now. But yeah, and then we ended up in August. We ended up going in on a flip in St. Albert. So we have yeah,
yeah,
been interesting.
been quite
Learning a
busy.
lot.
So yeah, this will be our secondary suite. So it's nice to have. There's
Okay.
it definitely helps. Like we have a primary residence with a legal secondary suite in it, fully permitted by the city of Calgary. So it definitely helps with the mortgage that way. So I definitely highly recommend if you don't want to like just just put all your money into regular mortgage. It definitely helps a lot.
Yeah, exactly. It's a form of house hacking. It just reduces your expenses, which gives you more income to invest in other avenues. So, from the sounds of it, correct me if I'm wrong. Yeah, were you guys like accidental landlords initially? Like it was your primary residence, you moved out, and then you just decided to rent it out. Is that how you got into it?
Yes,
Like
yes.
you had no intention of initially renting it out when you bought it, right?
No,
Okay.
not at all.
Okay. So if I'm not mistaken, the strategy that you guys are currently pursuing is fix and flips, right? Are you guys still looking to add rental properties to your portfolio at the moment, or are you like exclusively focusing on fix and flips for now?
So our current strategy right now is actually just long-term buy and hold, letting go from our rental portfolio.
Okay.
But
Yeah,
yeah, we are hoping to get into fix and flip, hopefully in the new year.
yeah.
That's kind of our main goal. So this one, as much as we're renovating it, yeah, we're just gonna end up burning it. So
Mhm.
rent,
I
buy,
see.
Rent,
rent,
refinance.
refinance.
Yeah.
So if I'm understanding correctly, this one you're keeping as a bar, but the one in Saint Albert, that one's a flip, right?
Yeah, so we were lucky enough to kind of get in on that property. We have a joint venture there that's boots on the ground. So
Mhm.
they're kind of just doing everything. It was nice that we're able to kind of just watch the process since
Yeah.
that is our first fix and flip, technically. So
Mhm.
the goal of that property is that it'll be uh, on the market next beginning of next month. So
Mhm.
it's nice to kind of watch the process of it, so that way getting our feet wet for our flip next year, beginning of next year.
Yeah.
Exciting, guys. I'm excited to see how that works out though. So you guys have two active projects on the go, given you guys aren't really boots on the ground in Edmonton or in Saint Albert more specifically, but that's exciting.
Well, I am boots in the ground here
Yeah, you boots on the ground there in Calgary, right?
in Calgary with this legal secondary suite project here. I'm definitely learning quite a bit from it.
Yeah.
Putting in a lot of sweat equity as well. Now that I'm part time in my work, so it's definitely a really good experience. Nothing's perfect. Obviously, you're finding things as you go. Like certain things, but yeah, it's definitely worthwhile for sure.
That is always the case, yeah. But that is exciting. I I I think being active in it is one of the most exciting parts of investing, being able to demo, being able to be a part of that transformation yourself. Yeah, definitely.
Yeah, for sure.
Finding the time to do what it takes to invest can be challenging for a lot of people. More so if you have young kids. Roxanne, Chris, do you guys have any tips for couples and parents out there looking to get more out of their time and do what it takes to invest successfully?
I think what it is, especially as a couple, right, is just being on the same page, holding each other accountable. Um, just figuring out like what what each person is responsible for, right? So we both have our whatchamacallit, responsibilities, right? And what we have to do in order to make this work. You got anything to add to that?
Um, Definitely a lot. Working full time, having this like family life. You have the housework to do. Never mind
Hmm.
trying to manage like my insurance side of things, and then our real estate business. It's a lot.
Yeah.
Honestly, if it wasn't something that we were passionate about, I don't think we'd be doing it. But because we enjoy it, that's a nice perk to it.
Yeah.
Um, but yeah, like when it comes to family life, like I'd recommend like, yeah, bring the kids along, like, get them to see your project, let them see the process unfold, right? Like it's make it fun for them. And yeah, but don't forget to have those mini dates with them, right? Like you have to remember why you're doing what you're doing, why you keep pushing, right? So yeah, all of that it's really important.
Yeah, definitely a way out what you can and can't do, right? Hire the professionals that were like the bigger jobs, I think. Don't I I mean there's certain things you can do yourself, right? But if you're not well versed in something, I'd say hire it out.
Yeah.
Um, build your power team, right?
Yeah.
Yeah.
Exactly.
Yeah, I'm lucky enough that Chris is a bit more hands-on, so he's able to kind of just be at the property more, and kind of be able to
Hmm.
just kind of be here to do everything while I'm at home with the kids sometimes. So at least they get one here there kind of
Yeah.
thing,
You
right?
definitely
So
have to find that balance. Like
Yes.
it can be tough, right?
Absolutely.
I'm sure you know as well. Like
Yeah.
you've got kids, right?
No, exactly. Exactly. I think you guys threw a lot of valuable tips in there. Like number one, defining your roles so each person knows exactly what they're responsible for. There's no
Hmm.
bloodlines and things don't get missed. Um, you guys are passionate about it, so that's another thing. Um, and then knowing your capabilities, like you said, taking that time out and knowing your why so that you don't lose sight of that, because if you're doing this for your family but you're not
Hmm.
getting any family time in, or it comes at the expense of your family, then is it really worth it? I feel like there's a lot of value that people can take from just
Yeah.
just that just that response, just this response. I feel like even if people just listened up to this part of the episode, like especially families, couples or people with kids, I feel like they get a lot of
Yeah.
value from that though. Um,
Yeah.
you guys broke that down really well
for sure.
because it is challenging. I mean, it's challenging for it can be challenging for a single person. It could be challenging for a couple. It could be challenging for parents. So
Hmm.
more so for parents and more so for couples. So um, yeah, absolutely. I feel like
I
yeah. Go ahead.
Yeah, I couldn't imagine as a single person doing this by myself, to be honest. So it just really helps having my wife by my side really push me
Exactly.
to be the best I can be.
Exactly.
Yeah,
Because ultimately you guys are a family, but you're a business as well, right? And investing, you need to sort of treat it as a business. And one thing that you have to
definitely.
do is define your role within the business, right? So
Yeah,
I think that's
Yeah.
very important. If you guys define your roles, play towards your strengths. Um and yeah, that was a great response though.
yeah. Thank
Um,
you.
Now, Roxanne, I know you within the life insurance industry. Could you explain to our audience what a whole life insurance policy is and what makes it different from your common uh, life insurance policy?
I guess it just depends on what you consider as common, but it is a life insurance policy in the end. So I
Or
guess
typical? Sorry, typical.
Yeah.
So you have there's term like just basics, right? There's term insurance and permanent insurance, and whole life insurance is a type of permanent insurance where basically, yeah, it accumulates cash value, but it's also like coverage that you have your entire life.
Okay. Okay. The term infinite banking has, at least I've noticed, generated a lot of traction on social media. But a lot of people don't really know what that means. Could you maybe explain the concept of infinite banking?
Yeah, for sure. So, it's something that's been in place for over 100 years. Um, like for example, like Walt Disney also took advantage of his policy where a lot of people didn't really believe in Disneyland, and he took advantage of borrowing from his policy so that he could kind of get that vision of his come to fruition. So um, it's something that was created from it was created by R. Nelson Nash. He has this book called Become Your Own Baker. I highly recommend reading it just so you can get a more in-depth idea of the concept itself. Um, so basically, in the end of the day, it's the goal of it is to just become your own bank, right? So his mission was to educate and inspire people just to take control of their finances. Um, basically, you would grow your liquid cash value inside a policy, like a properly designed policy, and then you can access or borrow against it to fund other investments. Um, but you can kind of consider, like, think about it like a home equity line of credit, right? So, like, as you
Yeah.
pay down your mortgage, you have access to more of the equity in your home if your bank will allow you to. They'll lend you more, or lend you the equity of the home, right? And from there, it's up to you what you want to use that equity on. Obviously, it'd be nice if you kind of use it toward other investments. Um, but yeah, it's kind of similar in that sense, but with infinite banking, it just has so many other benefits. From like the uninterrupted compound interest. Um, like with a bank, when you think about it, if they just left their money sitting there, they're not going to make any money, right? So banks make money by loaning it out, right? So um, just the
Yeah.
whole financial velocity of things, being able to access those funds. Um, the death benefit is another perk. Like there's just so many perks uh, to having it for yourself there.
Okay, I really like the comparison that you did with the home equity line of credit. I haven't heard that one yet, but I think for a lot of people it makes it a little easier to sort of understand the concept behind it or how it could be used rather. So um yeah, great response on that. Can anyone set up a whole life policy? You know, are there like disqualifying factors?
Um, for the most part, I'd like to set up a whole life insurance policy. Like my son, he's had it since he was like 4 years old. But because we were a young couple at the time, because of how like we want to keep our payments low, because of how little we put into it, there's not too much cash value. So there's not too much you can do with that. We like I set up a policy for myself just so I could take advantage of the opportunity. Um, but basically, it's it's still an insurance policy, right? So it's still something that you do have to qualify for. So the insurance company will do their due diligence and like assess the risk of your death, right? Like you don't like talking about it, but it is still something that you have to put into play. So yeah, you qualify for it. They say, like, when it comes to, insurance, the people who want it, something ends up happening to them where they don't qualify for it anymore, right? And that's when you actually truly understand the value of insurance. You can't qualify for it anymore, which really sucks. There is ways around it, like, uh, uh, using, like, putting the insurance under, like, having the insured life as your spouse or your dependent. So there is ways to still have like use it, but basically, there's workarounds, right? I have to say it's not for like everyone, but with the community of investors that we're connected to, I feel like we're tapping to the right market for it
Yeah.
for sure. It's we all want to get our money working in multiple ways, right? That's kind of yeah.
Exactly. Well said. I mean, you want to the goal is to get your money working for you as opposed to you working for your money at the end of the day. So
Mhm.
That's why I was really excited about this episode is understanding how you can tie this into real estate investing and just
Yep.
increase your velocity um, of your money there. So, what is the process of setting up a whole life insurance policy? So, what do people need to do?
Connect with someone like myself who has their license, but has also done the research, right? Who knows how to kind of structure it and make sure it's set up properly. I'd sit down with them and make sure we understand what their intentions and their goals are, and just yeah, make sure it's structured properly. I have a great team that's able to help me make sure that it is something that we're doing right by the client. Um, because it's not something common, um, like what we were taught growing up, it's definitely not something we were taught,
Yeah,
right? So, a lot of financial advisors would say, like, be careful, like scam, or um, accountants would say, don't do it. Like, there's just so much, like, I guess, just people don't know about it, right? And so, because of the lack of information, a lot of people don't recommend it. Um, so just yeah, making sure you connect with someone who's already done the research and knows how it is and how it works, so that way they can kind of like, better explain it to you. So that way they can kind of answer all those questions you have, right? There are people who claim they know how to do it. So just make sure you are careful in that sense.
Mhm.
Just because sometimes they design it wrong, right? And then at the end of the day, it's back on the client, right? Like it just sucks for that. So
that's great though. Yeah, yeah. I've heard that though is be careful who you do it with so that they set it up right. And I agree. The more you educate yourself, the more you can squash those fears because fear stems from not knowing most of the time. So if you can get educated on it, if you can speak to someone who's highly educated in it, they could sort of just help ease those fears, and then you can understand how to use it to your benefit. What interest rates can someone expect to earn from a whole life insurance policy?
Um, so I'd say a ballpark of about 5%, which some people are like, "What? That's it?" Right? But you have to consider, like, this is something that's going to compound the rest of your life, right? Like, they've had that saying
Yeah.
with the penny, like, doubling up, like, for only a month. Would you rather have that or $1 million, right? So just remember, like, as little as it is 5%, just remember that this is gonna just keep compounding, and it will give you a good return.
Exactly. And one thing to keep in mind is it's 5% of uninterrupted interest, right?
Exactly, exactly.
So you could get a higher percentage somewhere else, but as soon as you take that money out, it stops. You stop earning on that. So that's just a factor to consider as well.
Yeah.
Um, so what costs are associated with setting up and maintaining a whole life insurance policy, and what's the minimum amount required to start and utilize such a policy?
Yeah, so when you say cost, there's, like, no specific fee to set it up, right? Basically, you pay a premium, like a typical insurance policy, and you can set it up monthly or annually. Again, it depends on a few factors like, your age, your gender, your health, of
Of
course.
course. Yeah.
Smoker, non-smoker, so many things. For example, like on my policy, I decided to pay for it annually. Within a few weeks, to, um, I got access to the fund, and then, so I think I got access to about 50%, I believe is how it works. And then from there, after the first year, at the end of the first year, you get access to about 75%. By the end of the second year, you get access to more, which is like about 85% of what you put in. Um, of course, it's the premium that you pay every year. Um, but yeah, I oh sorry, I was gonna say, yeah, I printed a case study for a male, healthy male, of course, kind of depending on the insurance company, things like that, but healthy male, 35 years old, non-smoker. Um, he was putting in, let's say, 20,000 a year in his policy. By the time it was his 10th year, when I was looking at the study, he would have access to about 230,000, right? So you think about it, with the 10,000, sorry, with the 10 years and the 20,000 he put in, That's only 200,000 being put in, but he has access cash value at 230,000. So that is like, for me, when I saw that, I was like, yeah, it's like such a perk. Like, it's just compounding, right?
Yeah.
And you just have access to those funds. And if I can get access to it so I can reinvest, like that's even better. Um, at that 10-year mark, like you have to remember there's still a death benefit attached to this because it is still an insurance policy. So it was $1 million that this client would have. Let's say, God forbid, anything happened to the client at the 10-year mark, like he would have access to $1 million, which would pay off the $230,000 loan if, let's say, he used it all, right? At the end of the day, he still has something to give to
Yeah.
his family. From there, I was just like, oh my goodness, like you still get to access all those funds and get something left over to pay, like to give to your family, right? So it's so important. Like, I don't know. I just see the benefits. of it. Like, it's so awesome.
That's really good to know. And of course, after the 10 years, things start accumulating, you know, at a lot higher rate because it's all compounded, right? It just builds on top of each other. So um,
Mhm.
yeah, yeah.
Exactly.
So thanks for answering that with regards to the cost, because yeah, I know, of course, there's no way to predict what the premium would be. That's just all dependent on a whole bunch of factors
Mhm.
that would be personal to each and every one. Setting that up.
Hmm.
Um, is there a minimum amount required? Do you have to have like a bunch of money saved up to get started on this? What would you recommend people have at least before starting this? Or do they have to have like a lump sum saved up before opening up a whole life policy?
I don't think there's like a minimum amount, but like I mentioned, like with my son's policy, right? Because of how little I paid on top, like, because the goal is like you're overfunding the policy. So because of how little it was, I didn't have access
Yeah.
to as much, right? So it'll kind of go back the same. I kind of use that $20,000 uh, amount just because, like, when we do a flip, for example, right? That's kind of like a conservative number in regards to what we're making. Um,
Oh yeah.
but basically, yeah, it's if let's say I've done numbers like 5,000 and 10,000,
Okay.
it just takes a lot longer for you to kind of even out, right? It's just
Yes.
obviously nicer with the amount of money you put in, you have access to more, right? So, yeah, it just depends. Every situation's a little different.
Okay. For sure. For sure. I get that. I get that. Yeah, because my thought behind that was all like if people should be waiting until they have like a decent amount to open it up, or open it up and then as they get their money just add it to it. But yeah, I guess probably contact your professional and they'd be able to, give you advice based on your unique situation there. Um, how do you structure the repayment schedule? So say, you have access to your funds, you take that out, you invest it or hopefully do something wise with the money. How do you structure that repayment schedule? Is there freedom in the way you structure it, or is it sort of set up that you just have to pay the specific minimum amount each month, sort of thing? How does that work?
So what's nice with it is unstructured. So you can pay it back when you want, how you want, and if you want. Really, at the end of the day, interest will build, but as long as you put that into play, again, it's like a key lock, right? So if you don't end up paying it back, the interest is just going to keep on compounding there. But um, yeah, that's why I kind of like to use the example of Blitz because you're borrowing it for a certain amount of time, use it, make it work for you, and then from there, just put it back, right? So that's kind of why I like to,
Okay.
yeah,
Yeah. You
exactly.
can treat it like a loan, right? Like as if you're going to the bank. So um taking notes, or sorry, paying the bank, like you're setting a plan for yourself, right? To make those payments. So you almost got to train yourself to
Yes.
make sure you do that.
To pay that back. Yeah, yeah. Yeah, because just about my thought process behind that all was, if people take out a private
Mhm.
loan, like let's say, for example, for a flip, and there's some unexpected hiccups along the way, the chances of having that are very likely, like how would that affect you? So having that bit of freedom, if you do need to delay paying it back a little, is great. So when you take money out of your whole life insurance policy, you lending it from yourself. Are you paying any interest on that money that you're taking out?
So every insurance company is a little different in regards to what they charge. So the one that I've dealt with is, I believe the rate is ballpark about 6.2%. So the goal of it is that you are earning, right, more than that 6.2% so that you're able to kind of make money instead of that money just sitting there, right? Um, so yeah, it's so you just the goal is that when you borrow from those funds that you are investing it so it is making a better return for you.
Okay, yeah, I understand that. So even though the interest rate that you paying on that is slightly higher, the net interest tends to be quite minimal as opposed to lending funds elsewhere, essentially, right?
Yeah.
Is there anything to look out for when setting up a whole life policy, just to make sure that you get the most out of it? Or is it somewhat standardized no matter who sets it up? Now, I know you sort of answered this question a bit. You touched on this like a bit before, and making sure that you contact the right professional so that they structure it properly. Um, but how can people make sure that the professional that they contacting is is setting it up so that they can get the most out of their whole life insurance policy? What are some things they can look out for?
So at the end of the day, I think you just have to do your due diligence. Um, Look up the person who's going to set up your policy. Look up the companies that they're wanting to set up your policy with. Make sure everybody is reputable. So again, just doing your due diligence is really important.
Um, Tell me, how can, and you have touched on this a little, but how can you combine a whole life insurance policy with real estate investing? Whether this is, fix and flips, buy and holds, BRRRR projects. How do you tie that up with regards to the money flow and all of that, just to get the most out of your money?
Yeah, no, for sure. So this is the main reason I had that case study because I kind of wanted to give you an example of kind of like the actual numbers aspect of it. Um, so like I mentioned, a flip would be about, I'm being conservative. A lot of people make sometimes a lot more. But like, let's say they make that 20,000, right? And this is only once a year. Imagine if you did more, right? But anywho, with the one flip, you made 20,000. Um, Imagine every year you funded a policy for 20,000, right? And we were working with that healthy 35-year-old male, right? Um, in 5 years, you'd have access to about 95,000. So that's almost all of what you've put in, right? Um, in 10 years, I mentioned earlier, it was 230,000. If you keep going, let's say in 20 years, you'd have access to 600,000. Remember, like you put in only 400,000, right? So 20 years times 20,000, 400,000. So you have access to 600,000 cash value, and that's not even your death benefit yet, right? So it's just, especially if you're already reinvesting like these funds already, like that's why I'm just so like keen on the infinite banking. So I'm like, just get your money working for you in more ways than one, right? So
Yeah, yeah.
um, like for on my end, when I set up my policy, we ended up funding our project in St. Albert. And so once I got access to the fund, I believe it took a few weeks. As soon as I got access to it, we put some funds down on St. Albert there. And then as soon as that property sells, I'm just gonna take the money we make and then we're just gonna put it back into the policy, like pay off that loan. So it's just something that you can definitely just really take advantage of your money uh working for you, right? So
Yeah. Yeah, that makes a lot of sense. So you sort of just recycling it, loaning from yourself, paying it back, and any profits on top of that, paying that in. So you have a larger amount to loan from, and then just keep that cycle going so that, you're increasing your value in your policy,
Yeah.
and you're increasing your lending power from yourself, essentially. Do you guys do the same thing with regards to your bar projects? Like take your renovation costs, lend that out for your renovation and then put it back in?
Yeah, exactly.
Okay.
Definitely it works really good with birds too.
That makes a lot of sense because if you're comparing that to, I mean, okay, with the home equity line of credit, or if you compare it more specifically to taking out private money, that can be really costly. So that's why you're setting up an insurance policy, which I think is important for people to have. But you also have the benefit of having these funds at your disposal without having to go lend money at higher rates. My knowledge when it comes to infinite banking is short little TikToks that I've seen along the way. So this has been really insightful, actually.
That's how I learned about it too, like through TikTok. Like I was hearing about it and I was like, oh, I think this is only something in the States. And then someone approached us here about it and I was like, hey, this is I think what I had heard about that's in the States. And I was like, how does it work? And honestly, with internet banking, it's like a hobby for me. Like I just dig deeper and deeper and deeper into it. Like it's
Mhm.
not even something I need, right? But it's just like it's so
Yeah.
interesting. That's why it's so fun for me.
I don't know if you heard the episode that I had with Joey. We actually spoke about it. And I'm like, I am super excited to have Chris and Roxanne on because I want to
Yeah.
learn more about this.
Joey
Yeah.
always like mentions it.
With regards to a family, do you recommend both partners take out separate policies and add to it each month? What would be the best way for a general household to set this up? Now, while I'm asking this, I'm thinking that your answer is going to be yes, because at the end of the day, it is a life insurance policy, so it's best to have it for both. But I'm ignorant on this topic, so I'll let you answer that for me, please.
Yeah, no worries. So honestly, it depends on everyone's situation. Everyone's situation is going to be different. Um, I've had uh, I've had clients do it so that it was like, you know how insurance works, right? So there's joint last to die and joint first to die. So if both lives are insured, both parents' lives are insured, but if it's joint first to die, if one of the parents end up passing, the insurance, the death benefit ends up getting paid out to the living spouse, right? And then there's joint last to die that if, like, let's say both lives are insured, but like if one passes, it's fine. It's when the second spouse dies, and then the death benefit gets paid out. So there's different ways to structure it, and then I've had policies, for example, parents have set up policies as well. So it just depends, right? So it depends on what they're comfortable with and their situation.
Okay. Yeah. Yeah. Honestly, I didn't know that though. So I'm
Mhm.
guessing it would really just vary on family to family, person to person basis.
Mhm.
I'm guessing first to die would benefit the living spouse, and last to die would benefit more the dependents that you have essentially once
Exactly.
both partners are gone. Okay.
Exactly.
Okay, so you guys have touched on how you guys have used this strategy of combining whole life insurance with real estate investing. Would you mind if we run through one of your deals?
Yeah, we can do maybe St. Albert, the flip, just because our numbers are kind of a bit more hard up,
Mhm.
kind of analyzed properly on that one.
What kind of property is it?
So yeah, it's a bungalow. Our joint venture ended up finding it for us. Um, we actually found it through MLS. The seller themselves wasn't having much luck selling the property as it was. So our joint venture ended up approaching them regarding seller financing, which we ended up getting the property. I think the property itself was going for about, I believe, 350 on the market. So I think we got it for about 330. Well, we did get it for 330 for seller financing. So this was a bit more creative uh, investing on the side of things. But from there, renovations are about 75,000. So we calculated, and then comparable in the area ARV is or after repair value is going to be 475.
Yeah.
I love this though. You guys are using you're using whole life insurance, you're using seller financing and
Yeah.
and fix and flips, and you sort of just combining it all. It's amazing the different combinations of creative investing that you can sort of combine to come up with solutions. I like the seller financing. Often people think that seller financing is maybe only used for buy and holds, but yeah, it can be used for fix and flips as well. So currently, as you have it, it's the seller's financing it. They're keeping it in their name until you guys essentially fix it all up. So the only money that you're really putting in right now is for the renovations, right? Which you pull in out of your whole life policy.
Yeah, so we have a couple of joint ventures on there, but yeah, of course, for our end, it would be from our whole life policy. Yeah,
So you guys are essentially just money partners.
basically, yeah, and we get to watch the project unfold, which
Mhm.
is the goal of that property. We were able to kind of just watch all that stuff. Uh, it's nice because our joint venture, this is his second flip. So he already has all his contractors, all his trades in place. So it's a little bit quicker. There's obviously some hiccups along the way, but
Mhm.
it's a lot easier when you've done it once, right? So
Absolutely.
Yeah, just the beginning of the year, we just started diving deeper into creative real estate investing. So the way I started was just listening to podcasts, and I discovered Wayne and Gabby's podcast earlier this year, and that definitely helped a lot. Waking up early at 6 a.m. to catch the morning
Yeah.
show. So definitely shout out
Yeah.
to Wayne and Gabby for all their help and creating the real estate investing masters group, which we have joined. And we've definitely learned a lot, like with just general long-term buy and hold as landlord rates. Our like suited properties, general fix and flips, spurs, AFS, seller financing, wholesaling,
yeah.
rent to owns, multifamily, short term rentals. Like
So fun.
there's just so much
There's so
angles
much to it.
to all this. You know,
Yeah.
like like traditionally going through realtors, which we still use, right? Mortgage brokers. Like there's so much to learn, right? And it's just been great. So I love it. We love it.
Yeah, we
Yeah.
actually heard of rent to own so when we our second property here in Calgary, when we were moving, we were supposed to sell our first property here, but in 2018, the market wasn't the greatest, and so we were like, "Honey, what are we gonna do?" And luckily, I was looking on Kijiji, and there was that rent to own kind of option where they're like, "We'll pay your mortgage, your property tax, your insurance, and we'll take care of all the repairs in the house, and you'll have a guaranteed payment until they purchase a property." And I was like, "Oh, okay, this sounds really good. Like, I don't have to think about it. Like, sure." We ended up it was supposed to be a 4-year contract. Um, they ended up giving it back to us in 2021, last fall, and it was just
It
they had
was,
two. They had. You want to talk about it?
yeah. I mean, when we got it back, it was definitely a shocker. It's like, oh, we gotta, we're like scrambling around, like, what do we do now? So,
It
you
wasn't
know,
as hard though
Yeah.
because so
yeah.
we have done a few other things in the meantime. Like our first secondary suite that we built was on our primary residence right now, which is in a new build. So we knew we were doing it, so it was already zoned for it and everything. Um with so anyways, we ended up building it in 2020. In 2021 January, we were able to rent it out. So we already kind of had the documentation and everything for it, which was nice. And then here comes September, and they're like, "Oh, September 1st, they literally just handed us a note with like, we're giving you back your property. We're not buying it." And here we were like ready in 2022 that we were going to end up like selling this property already. So we were like,
Mhm.
"Okay, what are we gonna do?" And we're like, "Okay, we're gonna end up renting it out." We already have the experience, which is nice. So we just took the same paperwork, set it up for that property, fixed it up, like, because they obviously gave it back to us a little bit not as new as what we
Yeah.
initially gave it
We
back.
had, we had a bunch of repairs to do. It took
Yeah, a
us
bunch of
about
repairs on that one.
2 weeks to put in some sweat equity into it, and we got it rent ready.
Yeah, we
And
got it
yeah.
rented by October 15th. Tenants were already moving in.
Hmm.
So it was a nice
Hmm.
turnaround. But yeah, those same tenants have renewed this year. So
Yeah.
we've been very fortunate.
And currently we're definitely looking into more like short term rentals to kind of increase cash right
Yes.
now. So it's a big thing.
Yes.
We we've
Yes.
we've heard a lot of success from other people, so we're definitely gonna dive deeper into that part of real estate investing.
Yeah. Yeah. I think that it's a hot topic lately, given the current market is short term rentals. Um, so
Yeah.
it seems like it didn't turn out too bad with regards to that one. A few repairs. What did the total cost on that come out to? I know we actually supposed to we actually speaking on the St. Albert flip, but I'm actually interested to
Sorry.
hear about how about about this rent to own, how that ended up turning out. So yeah, you said just a few weeks, like 2 weeks of repairs, but how much did it end up costing you in total to repair it? Can you recall?
It wasn't too
Um,
much.
with my sweat equity, we put probably about maybe $1,200 in material and stuff like that. So
Okay. Yeah, I mean, considering the pay down, mortgage pay down, all that stuff while they were in the property, I'd say it still ended up being somewhat of a win for you, right?
Yeah,
yeah.
exactly. Yeah, we didn't have to think
Well,
about it
well,
for almost a
the
year.
rent-to-own specialist, they actually covered the material too as well. Um, so it was my labor really that helped as well.
Yeah, at the end of the day, they ended
So
up paying for all the material to fix
yeah,
it and stuff. So it did nothing came out of pocket, just more for the side.
yeah, yeah. I had some helpers as well.
Oh, I
So
see. I see. Okay.
yeah,
Okay. So with regards to the St. Albert flip, has there been any challenges so far though?
everything's been pretty good so far with
Pretty
that
smooth?
flip. Yeah, I think so. I mean, the
Yeah.
little hiccups here and there, but
Okay.
nothing to cry about. So
Our joint venture was pretty good on analyzing the deal pretty good and knowing what
Mhm.
to kind of renovate and make it worthwhile. Hopefully everything turns out next
Yeah,
time.
looks like it's gonna stand out on the market, so not too worried.
Good, good.
Hmm.
Any advice for any potential money partners out there? Because in this deal, I mean, you guys are money partners. You aren't boots on the ground, aren't putting any sweat equity into this. If there's anyone out there who has a little bit of cash, maybe they have a whole life insurance policy and they just wanna increase their rate of return and make their money work a little harder for them. Any advice for them out there looking for someone to partner up with that can actually be the active investor?
Yeah. Network, go for coffee. Really get to know the motive of the partner, right? And figure out how to make a win-win situation out of everybody, right? Everybody involved. There's too many people that
Yeah,
will be involved actually, even in a two-person joint venture, you know. Everyone wins. Contractors, lawyers, realtors, wholesalers, name it.
exactly. And I think that's what you guys did is, you guys would even come to the Edmonton meetups and network with people, and that's where you build the relationships, build trust, so
Yeah.
that you feel confident when lending someone your hard-earned money. That yeah, there could be challenges along the way, but it's all going to work out in the end.
Yeah. Nothing's
Yeah.
guaranteed, definitely.
Oh yeah. So, a part of building a successful business is building your brand. What are some things that you guys have learned when it comes to building your brand? I see Roxanne is very active in building her whole life insurance brand as well. And then you guys together as a real estate investing power couple. Do you guys have any tips for people out there to get started in building their brand?
It definitely takes work. Um, with all that we're trying to do and accomplish, you really have to be intentional with your time. Chris and I are just actively building our brand, posting more content, just trying to provide that knowledge to people who aren't in the industry, right? But are interested. Um, Basically, it's like a continual work in progress, right? Just continue posting and yeah, we're still trying to kind of. It sounds like it's working. Um, what I'm trying to put out there is I am there for instant baking, but also real estate, and that's exactly what you stated. So it sounds like it's working.
Yeah, yeah, definitely. I think so. Um, what advice do you have for someone who's looking to scale their real estate business to the next level? And like I see you guys have taken that step, right? Like just from what I understand, your journey, you guys have been in this for a while, but you sort of more recently have taken it to another level, increasing your momentum and how much you're actually getting done. You currently have two projects on the go now, and you've started in fix and flips as well. So you sort of expanding on that. Do you have any advice for people looking to scale their real estate business?
Definitely get a mentor.
Yeah.
We're so happy we joined Wayne and Gabby's mentorship program. Our knowledge on real estate investing has surpassed my expectation. I don't know about Chris,
Mhm.
but like on the options and possibilities that you can do. I
Mhm.
honestly went into it like, oh, okay, let's figure out how to do more rentals. But like there's so many creative strategies out there. So getting a mentor, get someone who's done it, who knows what you want and who can who can show you how to get there, right?
Yeah.
Yes.
And surround yourself with like-minded people, of course, right?
Mhm.
Because you will become the people who you surround yourself with. I know it's cliche, but it's true.
It is.
It's true. It's true. It
Yep.
stems from truth. Absolutely.
Yeah.
Yeah, I love that. I love that. I agree with both answers. Is
Yeah.
a mentor to teach you what you don't know because you don't know what you don't know, and you may have a vision on what the best path is to get to your goal,
Yeah.
but your vision is based purely on your knowledge and your experience, whereas a mentor who's ahead of you can actually show you the best path to get to the ultimate goal that you're looking for. So why not take the shortest route? Why not take the route of least resistance or the route that best
Yeah.
suits your situation?
Get with people that have experience already, right? If you're just
Exactly.
starting out, so that they can tell you what to do and what not to do, right? Or ask me, ask her, right? Like we
Exactly.
can help with that, right? So
Yeah.
reach out to us, reach out to you, reach out to people in the community. We're there to support each other, right?
Very supportive community.
I was the community of the investor network, it's so supportive, which I was quite shocked with. Um, I've been in Calgary almost 9 years, and I'm very to myself. Um, but within this last year, I
Yeah,
feel like I found my people. I say that to everybody, but like everyone is just so supportive. Want to provide that information, want to help you get to where you want to be. It's such a nice feeling. It's great.
yeah,
Yeah. Absolutely. I was
yep,
pleasantly surprised myself, and I completely agree with that. Is the people that you speak into on a regular basis should be investors, especially if this is something that you're passionate about, that you're looking to pursue. You not only learn from other people's mistakes, you get to bounce ideas off of other people. You get to see how they actually uh, think and see and process potential deals and work
yeah,
through potential problems. It just helps expand your point of view, your knowledge, and yeah, I agree with you, Chris. You tend to be the average of the people that you spend most of your time with, right? So why not spend it with good
yep.
quality people who are interested in exactly what you're interested in? So great advice, guys. I completely agree with that. Now, on a side note, when you guys aren't investing, how are you guys spending your time?
Quality time with family and friends for sure.
Yep.
Um, I travel a lot. Um, I work for an airline, so I get to do my weekend trips, which is always nice. But basically, just yeah, I have a lot of downtime where I get to
Mhm.
spend time with the kids, which is my favorite. We go for hikes often.
Yeah. I like to spend time with friends. Even not like-minded people too, right? I like to just kick it back with some longtime friends and have a beer or something,
Yeah, absolutely.
get into sports, right?
Chris, Roxanne, where can our listeners find out more about you? If people, maybe Roxanne, if people want to reach out to you with regards to whole life insurance, if they have questions, if they're looking at maybe implementing this into the strategy into their arsenal, where can they reach out to you? And then you and Chris, both in general, as real estate investors, if people are interested in maybe partnering up with you or just following your journey, where can people find out more about you guys?
For sure. Yeah, please feel free to reach out. You can reach me on Facebook, Roxanne Endrinal, or on Instagram, roxanne.infinitebanker.rei.
Instagram, oh, just Chris dot Endrinal, and that's my username.
And I think Facebook's Chris Endrinal. You can find it.
Yeah.
Perfect. Yeah, I'll make sure to leave all that in the description as well. Thank you guys so much for taking the time out today. I honestly I appreciate it. It has been super informative. I'm sure the audience got a lot of value out of this one, and I'm excited to follow your journey as well. So yeah, thank you guys.
Awesome. Yeah, thank you so much.
Thanks, Alray. It's been a pleasure.
Thank you for tuning in to Building Wealth Through Real Estate. As an investor, we looking to build for the long term, and we're looking to protect everything that we have built. That being said, I think you'll find a lot of value from the episode where I interview Keaton Kirkwood. Make sure to check it out. This is your host, Alray Noble, signing off.